During this well-defined trend, there are good examples of clear and often sharp reversals at areas of confluence where price reaches the boundaries of the Bollinger Bands to form distinct candle patterns with quick confirmation. Recently, there's been a clear shift towards moving into a horizontal range, which allows us to build on these basic observations. Again, clear reversal candle formations with quick confirmation at the boundaries of the Bolinger Bands, which can also be considered near the top of the boundary for our horizontal range and this more recent double top range, which, as would be expected, produces a consistent and sharp drop. Naturally, such a steep downtrend is able to maintain contact very close to the lower boundary of the Bolinger Bands for quite some time. As price falls towards the $2 boundary, the first default Fibonacci extension level close to 250 helps better define a more realistic lower boundary rather than just one single price level. Because as we've seen before in previous examples of sharp trend accelerations, the strongest portion of a trend will move close to the boundary of the Bollinger Band like we've seen. But when the trend slows down for the possibility of a reversal or continuation, price will often drift away from the boundaries of the Bollinger Bands. So these additional references in the mid to low $2 range help define the area where neutral to bullish movement was more likely to form, following the double top acceleration beginning to slow.